In this video we are going to be analysing PKBO. This one's going to be very quick because it is a recent mover. So what are going to be the key levels that we're paying attention to? And really not many to go off. We got $10, $11.80, $13.50, $14.25 and $13. Now these are going to be, and also $10.60. These are going to be those key upside targets if we continue to push up. What are key supports? Again, very easy to see. We got one, negatives, obviously we can't even include that. So if we go high, we're looking at $1.43, $3.18, $4.58. Right below we have $4.90. Another one at $5.80, $7 and $8.21. So these are all the levels that you want to really be paying attention to, and you can see, looking at how this stock trades, you want to be waiting for the reversal candle. So yes, sometimes depending on the stock we're trading, we can usually have tight stops and just trade these levels instantly, but we can see this, at least today, it kind of just flew through these levels and would finally reverse at one of them, give you a good reversal candle, and that looks like how this stock needs to be traded. So if you're trading off these levels, they should be valid, but again, you want to be looking at most likely a reversal candle to be looking to trade it. You don't have to be trading on the 5 minute, because in a stock like this you may get delayed, but you may be watching it on the 1 minute, seeing how it trades. You can see it comes down, reversal candle into it, or kind of flip through it. Here came through, might have got faked out in here, but again, you probably would have taken some profits in that kind of move. Again, you broke through this level, you broke straight through here, no sign of bearishness coming into this level. Again, gapped straight through, no reason to be bearish. So it could have kind of provided the fake outs if you were just looking and not getting into this trade instantly. And this is one thing that's key to observe when you're looking at different stocks. Are they ones that you can kind of just trade coming into the level, having tight stops, or do you need to be watching for reversals? It tends to be on these lower volume stocks. You need to be watching them, just because, again, not many algorithms touching it, and that's really the key thing. If algorithms are touching it, then the stock trades actually a lot more predictable. That's why I personally prefer to trade large caps, because they're a lot easier to predict how they're going to trade, because if you know how the banks are moving, you know how the institutions are moving, it makes it easier to know when levels are going to be valid and high volume is going to come in. However, in these low volume stocks, which tend to be more retail focused, there's not as much sense when they're trading them. There's not as many algos running on them, so you need to be watching more for a reversal sign. So again, we broke through this level, got that reversal doji, and kind of just a reversal candle in general. But again, even if you didn't take that, you could have just traded the breakdown of the consolidation. But really, it just shows, yes, pay attention to these levels if you're looking to trade this stock, but be watching it, even if it's just on a 1 minute. Again, we don't tend to usually trade too much off the 1 minute, but yes, you can on these lower volume and smaller cap stocks, and just be watching for the reversal signs if you're looking to trade these levels, because otherwise you are going to get really battered on this kind of stock, because we can just see how it's moving today. Would have been very difficult to trade if you were just buying blindly, even with tight stops, because we see it kind of just popped through. Liquidity isn't great on this kind of stock. I imagine spreads were wide, you would have got probably absolutely destroyed unless you're watching it. So again, the levels we're giving you, like we always do in any of these analysis videos, they're the levels to watch. But you do have to sometimes make adjustments if you're trading these smaller caps, smaller volume, or kind of just low liquidity stocks. You have to be then watching for reversal signs, just so you don't get screwed, because again, if it's going through one of these levels, there's no liquidity to really get you out. You could be down $1, $2 a share, and on these kind of stocks, when they're this cheap, you could be buying $1,000 a share. You could be buying 1,000 or 2,000 shares at a time. Whatever you're doing, there is definitely a lot of opportunity to get screwed, and sometimes not great risk to reward unless you're watching. So again, that's the key thing I just wanted to note. Yes, these are the levels. Pay attention to these if you want to know where usually volume should be coming in, but be definitely looking at these intraday charts on how to actually play off these levels, because otherwise, again, you are going to get screwed on these stocks. Anyway, that is the quick breakdown on PKBO. If you did enjoy the video, why not drop a like and subscribe, and check out one of these 2 analysis videos.